In this video, guys, we're going to look at the top 4 causes of huge trading losses and how to avoid them. Hey traders, warm welcome to you. So, trading losses, inevitable, huge trading losses, hopefully not. Nearly most of us have experienced catastrophic trading losses. Hopefully we recover from them, we learn, and we don't do it again. But there are plenty of reasons that we have these catastrophic losses or huge trading losses. But I've got 4 for you, which are without a shadow of a doubt the biggest, and we need to avoid them. Right, number 1, stubbornness. Ego, being stubborn. This is a classical one, guys. We may have a stock that's ridiculously overvalued. You're shorting it, you keep shorting it. That thing can run for years like that before it eventually collapses, if it even does. The market may be the most overvalued thing in the world. You may be shorting it and you may be getting hammered. You may think it's the best bargain price in the world and the market doesn't agree with it. The market is the only thing that matters. Current price is all that matters. What you think, what logic says, what the analysts say, what the cleverest guys in the world believe and have calculated is completely irrelevant. We need to be looking at things with a clear mind, not being stubborn, not letting ego get in the way of ourselves. That comes from trading, and it comes from persisting with something that's not working. Stop adding in trending environments at high, or stop adding, in range-bound environments at highs. You know, stop trying to fade trends intraday, whatever it may be. Stubbornness, ego gets in the way, it kills us. Number 2, oversizing. Massive, massive, massive one, this. I know so many traders who have done this, and I've done this myself, oversized on positions and been punished for it. Trading is not about putting all the chips in and hoping. There are times when you press the throttle, yes, and if you're a subscriber here, by the way, I appreciate your support. If you're not, consider doing so. There are times when you do want to push the throttle down, you do want to push a few more chips in, you do want to put a bit more capital at risk, fine, within the parameters of your plan, but too many times people just go all in. They go too aggressive. They oversize the position. And of course, what happens is they do it once, maybe they get away with it, do it again and again and again. And eventually that loss becomes catastrophic. Too big, too soon. You're trading from an emotional perspective. You're not trading from a clear, clinical, objective viewpoint that you should be if you're being a good trader. All right, number 3, guys, adding to a loser. Paul Tudor Jones said it, losers average losers. Nobody ever in the history of trading said that adding to a loser is a good thing. Now, let me just add a caveat to that. If your plan says I'm scaling in between here and here, that's different. Your strategy is to buy at this point, is to buy at this point, is to buy at this point, and to stop, then that's a plan. That's fine. Adding to losers is you're just adding because you think it's cheaper. It was a great buy up at 100, it's now 90. It was a great buy at 90, it's now 40. It's a great buy, you get the point. It's an unstructured way of doing things, and the trouble is you're in your worst positions, you're in your biggest positions normally when they're at their worst. So it's just completely counterintuitive, and that's a big one. Okay, number 4, guys. We've talked about this before, trading without a plan. If you don't have a strategy and you don't have a plan of action, you will do all these things. You'll be stubborn because you won't want to come out of a position when it goes against you. You'll be trading too much size because you think it's great. And you know, I've talked about how this was something for me as well in trading way too much size, getting away with it, then not, getting away with it, not. You know the score of how it goes, adding to losers. If you've got a plan and a strategy, yes, you may not stick to it all the time. That's a discipline issue for you to work out yourself, and we've done other videos on that to help you out on that. Go and check them out. But if you've got a plan, you've got a broad idea of what you're trying to do, at least you can highlight things that might make you into a dangerous trader. All right, so let's talk about how to avoid them. Okay, so how do you avoid stubbornness? You literally let the market tell you when you're wrong. You have a stop out point. When it hits it, you cut it, you're gone. You don't get crazy with it. You don't try and put your ego into it. You just have a point where things are wrong. You cut it, that's it. How do you avoid oversizing? You're very strict with your money management. Comes back to the plan. You make sure that you have a strategy in place that says, hey, it's this pound a point, it's this number of CFDs, it's this number of shares, and don't deviate from it. And if you do, have a punishment in place that stops you from digging in a massive hole. We've done videos on that, go and check them out. Number 3, adding to a loser. How do you stop doing that? You just stop adding to the losers. Whenever there's a loser, just have a rule that says, I will not add to a position if it's in a worse place than I started. If you are struggling with that, I would suggest not even allowing yourself a scale in within a range. I would say, hey, I'm allowed to scale in as it goes in for me, but just a rule that says nothing. Anything lower than the price I bought at, I'm not going to add to it. Anything higher than the price I shorted at, I'm not going to add to it. Make that a hard and fast rule, and that'll help loads. Final thing for trading without a plan. Easy solution, guys. Make yourself a trading plan. I'm a big advocate of that. You'll know I am if you've watched the channel before. Even if it is 5 lines on a scrap of paper, back of an envelope that says, do this, and that's a good start. You can build from that. Just get something down on paper, some idea of what you're going to do, and then expand as far as you need to go. Anyway, guys, that's it. Top 4 causes of huge trading losses and ideas on how to avoid them.